Good morning. Good morning. Very good. Karthik, good morning. Annie, good morning. Hitesh, Jen, good morning. Everyone, good morning. So send me your presence. All who are available, send your presence so that we can start and we can understand that how many are present. Yeah, start sending your presence. Very good. Very good. It's really a good morning because today there's not too much hot, not too much cold, and this is the environment in North India. What about your environment in other areas that is all better known to you? But in North India, these are today is a good environment in the morning. Very good. Meghna, good morning. Ben Reddy, Aditi, Shruti, everyone, good morning. Send your presence. Very good, very good, very good. Today we have to, as we have discussed last in our last lecture, that AS 17 was very important, which we have discussed. Today, obviously, we will start with the problems of that chapter first. If there is any issue in that chapter, we'll discuss that and then we will proceed. So, starting with that, if you have any problem, just tell me. Then we will proceed further. Any type of doubts? Illustration number one, we have already done AS 17. Then illustration number two was there. Yes, yes, very good, very good. Send your presence, beta. Fast, fast, fast. Only few students have sent your presence. Very good. Everyone. Sneha, Shriram, Metha, everyone. Madhuli, Meman, everyone. So send me the doubts also. So illustration number two was there, three is there, four is there. So there are four illustrations. In the fourth illustration, something advanced was there. Here he is demanding from you to prepare segment report. Report means for he is asking you to prepare a report in which how segments will be shown, how it will be presented. So in this case, he has made it very clear that there are forging shop division and bright bar division. There are two divisions, and except this, they are making domestic sales and export sales. Further, fitting division is there. So these are the divisions with them. So if we'll see, there are three divisions. One is forging division, second one is bright bar division, third one is fitting division. So there are three divisions. What he is demanding from you? He is demanding from you to prepare a segment report. So whenever he is demanding a segment report for publication, this is just for the purpose of publication. So this is for the purpose of presentation. So in this case, presentation will be matter, that how it will be presented. The presentation will be depending upon the primary and the secondary segment. For that purpose, you must have to decide what will be the primary and what will be the secondary segment. Primary segment is to be decided on the basis of its features. And this distribution of primary and secondary is very, very important. So here it is very much clear that companies making some domestic sales and some export sales. And this will be done in case of, you may say, every department, because here the presentation is already made by them. If you will see this, he has assumed these forging, bright, and fighting as the primary departments. So if you have already estimated that this will be the primary departments, we are not here to change that. So this is the concept of primary department here. These three are primary. Obviously, in this case, business segment is primary and geographical segment will be the secondary one. Geographical means for they are making some domestic sales, some export sales. So that will be a geographical distribution. Now, here it has given you that how much is the profit. Profit is 240, 30 and 12. So this is very much clear that out of this, how much will be your presented in export and how much in others, that we will see. Then head office cost reallocation. This is the allocated cost which will be added to the cost. And then interest cost is there, fixed assets are there, net current assets and long-term liabilities are there. So that he has made it clear that this is the primary segment. So this will help you to understand the concept of segment reporting. Now how to present it? See, here it is. I would like to go for the solution that will be easy for you to understand now. Now, in this case, first of all, we will have to present it in a proper way. Like this is the way how we are presenting it. Segment revenue. How much is the domestic sale? Because this is a geographical distribution, means we will have to go for the heading is business segment. Heading is business segment. And these are the distribution on the basis of geographical segment. So he has made it clear out of the total sales of 6225, 90 is domestic and export is this one. So this has been already given to you in details. Now there are some inter-department, inter-segmental sales. So those are to be added to it because total sales will be taken as a base. So inter-segmental sale will be added to it. After adding inter-segmental sale, total revenue is with you. This is the total revenue. And obviously, this is the way how we are calculating it. Whenever you are going to calculate your sales, but how you are calculating your sale? Sale is, if there is any domestic sale, you will have to take it. Plus, you will have to take export sales. So this is the total sale to external agencies, to outsiders. And this is the sale to the inter-segmental sale, means sale by one segment to other. So that will also be added. So it will become your total revenue. Now, out of this total revenue, after deducting expenses, he has already given you that how much is your profit. Your profit is given to you as yes, your profit is already given to you. This is 240, 30 and 12. It is 258 in total. Now we have to allocate expenses to it because this is before allocation of expenses. So what are the expenses by head office which are to be allocated here? So those are to be deducted. So it is deducted here. And then operating profit comes into the effect. Whatever is the operating profit, that is with you. Now after this, you have to obviously deduct interest expenses, as we know, because this is a profit before interest. Profit before interest. Because already it is mentioned in the question, if you see that this is a segment result and this is the amount of head of expenses. So we are just presenting it in a proper way. So this is profit before tax, PBT जिसे हम कहते हैं. So after this, there is no need of deducting income tax out of it because that is not a point of consideration for us. And then we have to, after allocation of this, you will have to go for allocation of assets and liabilities, presentation of asset and liabilities, whatever is presented there. This is the example which is given to you as a, you may say, for the understanding purpose also, because you haven't done how to present segment reports. So this is a way how you will have to prepare segment report. This is a example, you may say, not your query basically. Fixed assets are with you 360 and 188 is 540 lakhs. Net current assets are with you. And then segment assets are with you. Whatever the segment assets are there, that will be total of your net asset and current assets. Then we have some unallocated corporate assets also. So these unallocated corporate assets will be allocated to it. It is 147. This is not to be allocated, so it is kept in total only. Then total liabilities are segment liabilities are there, whatever the liabilities are. In addition to that, there are some unallocated liabilities also that will be taken as it is. So total liabilities are with you. Then the last but not the least, we have to present the geographical market sale separately also. This is basically a way of presentation. I already mentioned you. So whatever the sale we have made on the basis of geographical segment, so that will be taken. In that case, you will have to take the headings of domestic sales. This is the first heading, domestic sale, whatever is given to you, domestic sales, whose name is made home sales. Then export sales by forging department, export to Rwanda, means this is on the basis of geographical, to various areas wherever we have made sale, export to Maldives. So total sale is with you 6795. You may tally it with your total sales as calculated by you in your primary segment, because that will be same in both. That should be same. So check it out. Is that same or is there any difference? Just see it. Yes, it was 6795. It was same. So this is the way how we'll presenting it in primary reports and in our secondary reports. Primary segments will be covered in primary report and secondary segments will be covered in secondary report. So this is the way how we'll present it. Nothing else. It's just understanding, just a way of presentation. It is not of that whatever we have done in the AS, because in AS major thing was how to calculate which segment is a reporting segment that you have to calculate by way of 10% or 75% or 10% of profit and 10% of loss. All that was there. I assume that this is clear. Rahul, you may do one thing. You may take that lecture, whatever we have discussed in our previous lecture, from the YouTube or from your ICAI POS app, because this lecture is available in recorded mode to you. So it is better you may see that lecture from there. Your problem will be resolved. Those who are unable to attend the previous lecture may go for there. What is the meaning of segment revenue? Segment expenses, assets, liabilities are determined before intra-enterprise balances and intra-enterprise transactions are eliminated as part of the process of preparation of financial statements, except to the extent that such intra-enterprise balances are and transactions are within a single segment. बड़ा लिखा है पेज है, आप पेज नंबर लिख दो बेटा 1.56, 1.54 and 1.56. Okay, just see 1.54 page number and 1.56. The student has a query in that page 1.54 and 1.56. Okay, no need of taking so much stress. Yeah. Segment revenue, expense, assets, liabilities. Okay. On 1.54 page, it has been mentioned under the heading allocation. So whenever we are talking about allocation, allocation means for whatever expenses are incurred by head office and not by the segment himself are to be allocated to the segments. The way it will be better presented, it will be better attributable, it will be based on a reasonable allocation. So reasonable allocation will depend upon case to case basis. It will be depending upon an understanding basis. So amount that have been identified with segment for internal reporting purpose are directly attributable or reasonable allocated to segment. So we have to check it out what will be the exact base. Whatever base we will find suitable, on that basis we will have to allocate it. And this will be given in your disclosure also, that this is a base which has been used and this base is a reasonable base. Only you need not to worry about this thing that which base will be used. Obviously, it will be depending upon the management decision and this or accounting professionals decision, and this decision will be a better decision. You need not to worry about this. So here it is given. Conversely, an enterprise may choose not to allocate some items of revenue expense. It may be a chance that some expenses are allocated because we have a reasonable base for that. Some are not allocated because we doesn't have a reasonable base for that. So there's no worry about that. Segment revenue, expenses, assets, and liabilities are determined before intra-enterprise balances. This is the reasonable base what we are saying. This is not for the purpose of otherwise. When we are going to allocate some expenses, assume head office have incurred 1,000 crores in total, which is to be allocated to various segments. So while taking the ratio of allocation, how to calculate that ratio? For that purpose, intra segment transfers are not to be considered. That is interested to say. If it is a reasonable point. So that he is interested to say segment revenue, expenses, assets and liabilities are determined before intra-enterprise balances and intra-enterprise transactions are eliminated. That I would like to define in different way. Let's take an example, beta. Now, there are three divisions: A, B, and C. The rupees in crores. So assume outsider sales worth rupees 500 crores, 400 crores, and 200 crores are there. Now, enter the word used is intra enterprise balances. So I would like to use the same word because that will be beneficial to understand. Intra enterprise balances, whatever these are, assume it is 200 crores, it is 100 crores, it is also 100 crores by one to other. So if it is 700 crores, it will be 500 crores, it will be 300 crores. Now we have some expenses incurred by head office. Head office have incurred 100 crore of expenses which are to be allocated to them. So this expense will be allocated on the basis of 7 is to 5 is to 3, not on the basis of 5 is to 4 is to 2. So it will be in this way: 7 is to 5 is to 3. If it is 150, it will be better to allocate easily. So I may take it 150. If it is 150, it will be 70, 50, and 30. Now, while preparing financial statement, one thing is to be taken as very important. Whatever intra-transfer sales are there, intra-segment sales are there, that is not going to be considered. Because obviously, while preparing financial statement, at the end, whatever sale is made by one, that will be the purchase for other. You may check it out. If A has made a sale to B, what it is? It is for B, it is purchase from A. So it will increase the sale of B, increase the sale of A, but it will increase the purchase of B also. So that means for it will increase your credit side, it will increase your debit side. So this is a contra entry which is to be cancelled. So it will be cancelled while preparing financial statements that he is interested to save it up. Nothing else. Next is 1.56 beta. 1.56 you are saying if a segment is identified as reportable in the current period because it satisfies the threshold limit, should unless it is impracticable to be restated to reflect the newly reportable segment as a separate segment, even if the segment didn't fit. That I have already discussed with you that if a segment is a segment identified as reportable in the immediate preceding year, you are interested to go for this. If a segment is reported as a reportable segment in the current period because it satisfies the relevant 10% threshold, preceding period segment data that is presented for comparative purpose should, unless it is impracticable to do so, be restated to reflect the newly reportable segment as a separate segment, even if that segment didn't satisfy the 10% threshold in the preceding year. Now we have to correlate it with the previous paragraph also. This is clear that if a segment is reported once as a reportable segment, it will continue to be shown as a reportable segment, even if its revenue or its 10% threshold, whatever is the base taken by us, either assets are taken as a base or profit is taken as a base or revenue is taken as a base, it will remain continued. If a segment is reported as a reportable segment in the current period, because it satisfies the relevant 10% threshold, okay, preceding period segment data that is presented for comparative purpose. Basically, you should have to understand this thing, beta. Ki whenever we are preparing financial statement of companies, how that is prepared, do you know? Any one of you understand this thing? This means whenever we are presenting financial statement for 31st of March 22, we'll have to put up data of 31st March 21 also for comparative purpose. Means if we are showing sales that these sales are 2000 crores for the current year, it will be 1500 crore for the it was 1500 crore for the second last year. So this is required to be shown. So with that, he is correlating your information. He says preceding period segment data that is presented for comparative purpose only, unless it is impracticable to do so, be restated to reflect the newly reportable segment as a separate segment, even if that segment didn't satisfy the 10% threshold in the preceding year. Obviously, that is required to be disclosed because this is a rule that whenever we are giving current year data, we must have to give data of the previous year also, whether that is covered under 10% or not. Because last year, whatever has been done, that is a part of your current year balance sheet also. If you will see balance sheet format of last year, obviously it will be clear. Sonika, internal financial reporting point in 1.55. 1.55 page internal financial reporting. Yeah, this is given here on page number 1.54 beta. 1.54. Yeah, 1.55. Okay. On 1.55 page business and geographical segments. Okay. We are interested to understand this thing that generally business and geographical segments are determined on the basis of internal financial reporting to the board of directors. Means this is all depending upon the management to decide whether business will be a primary segment or a geographical segment. This is all depending upon the system of board of directors, how reporting is made to them. So that he is interested to define. Generally, business and are determined on the basis of internal financial reporting to the board of directors and the CEO. Basically, he is interested to say what will be the business segment. The definition we have already covered. Now, according to us, whatever is the business segment, that is according to definition. But practically, it is completely depending upon the concept of the process of reporting made by the junior staff to the senior staff. That is, if depending upon a specific business segment, then that is a better option to take it. So he is making you clear that if an organization have 5 segments which are assumed as a business segment already during the full year, because during the full year they have assumed that as a business segment and working accordingly. So that is a business segment because that have been already defined. Like in the illustration number 4, so you have seen export to Maldives, export to that country, other exports that has already been decided, already has been worked out during the working. So we have taken it as it is. If one or more segment internally to the director is a business or a geographical based on the factor in the definition, but others are not, paragraph below should be applied only to those internal segments that do not meet the definition. That is an internally reported segment that meets the definition. Should for those segment reported internally to the satisfy that management of the entity should look to the next lower level of internal segmenting that reports information along product and services lines of geography. So he is saying that if management is not treating it as a business segment, but our definition says that it should be a business segment, then it is a part of management to check it out and finalize that if it can be possibly to be shown as a business or a geographical segment, then it should be shown if such an internal reported lower level meets the definition of business segment, if it is possible. The criteria for identifying reportable segment should be applied to that segment. So it is a general information, general logical point that if it is not done by the management during the year, then it will be done at the end of the year whenever this will be come to the information. Intra-enterprise means it is transaction between the enterprise but its sister concern, holding and subsidiary companies, etc. Right? So when will we start PS sitting? Madhushri within 5 minutes maximum. If there is any doubt, obviously that will be solved. Otherwise, we will go for the heading business and geography. Yes, beta. Is my understanding right? So basically, so assumes everything is clear to everyone. So going for the next AS as it is demanded specifically by the Madhushri also that we have to start it fast. Madhushri, we are trying to do one favor for the students that if there is any doubt in the previous AS, we must have to discuss it in detail. Then we will go for the next AS. Because why we are doing this AS? We are doing it only for the purpose that we are interested to clear it in the exam. We are interested to present it in our exams. If you will satisfy yourself with all the doubts, all the practical problems, it will be easy to solve it in the exam. So it's not a मतलब ये कोई वो काम नहीं है कि आज ये हमने करना है और आगे छोड़ देना है. We must have to do it in a serious manner. It will be very important. Let's start with AS 18. Come to the Chuk reference module. Name is very much important. Here, 50% understanding is from name only. AS 18 relates to related party disclosures. So AS 18 is not too much practically involved in this thing that how calculation has to be made. Here, disclosure is the most important point. So our AS is normally divided into three parts. We have already discussed. One is its intro. Second one is its body. And third one is disclosure. Also, we have discussed AS from other system also. That is recognition, identification, measurement, etc. Disclosure. So here AS 18 is very important from examination point of view because this is major concern with the big enterprises, and in big enterprises we are also going to work in future, so there also it will become an important part. Here we are going to discuss about the requirement of disclosure of related party relationship and transactions. Whatever the relationship is there, that is required to be disclosed. Also, whatever transactions are between the reporting enterprise and its related party are to be disclosed. So the point is disclosure. It applied to each reporting enterprise, as also to consolidated financial reporting presented. Yes, it applies to each reporting enterprise as also to consolidated financial statement presented by a holding company. So major part is this, that it will be applicable on each reporting enterprise. If there are 5 enterprises and their holding enterprise is also there, so it will be applicable to all the 5 enterprises and also to the holding enterprises. At both level it will be applied. Now try to understand the meanings of each and everything, which is very much important, beta. Yes. Related parties and related party relationship. Here definition is given in this form. Here we have to learn, understand in this way. Parties are considered to be related. Parties are considered to be related. Means when they will be considered as related? If at any time during the reporting period, means if we are talking about the year 2021-22, so we are talking about a period of 21-22, that is a reporting period. One party, any party, has the ability to control the other party. Very simple. Like your father has the ability to control the complete family, or your mother has the ability to control your father. That means for one party has the ability to control the other party. Tell me who have the more ability, whether mother has the ability to control the father, who will be the controlling party, mother or father? One thing is there, if one party has the ability to control, I'm not saying whether he is controlling or not. Tell me one thing, whether he has the ability or not. If he have ability, we are taking it as a related party. Now, one thing is their control or exercise significant influence, means the decisions of the second party are maybe significantly influenced. Influenced means that can be affected, that can be changed, that can be taken over the other party. Means if husband and wife is there, I know it very well, and you may also understand that wife have the ability to control and may have significant influence over the financial or operating decisions by the other party. So we have to if where husband and wife have to go for a tour, that is to be discussed by a husband with wife, and obviously wherever wife will finalize, husband will go there. So whatever the decision is there of husband, decision will be taken by the husband, but that will be controlled and influenced by the wife. So here, who is the controlling party? Wife. And who is the party on which influence is taken? Who is the other party? That is husband. So that I am going to understand you. So definition is very simple, where wife has the ability to control or exercise influence over the decisions of husband. In that case, they will be assumed, these two parties will be assumed as a husband and wife. These both the two parties will be assumed as a related parties. So now go and read the definition. Parties are considered to be related if at any time during the reporting period one party has the ability to control the other party or exercise significant influence over the other party. One party has the ability to control the other party or exercise influence over significant influence over the other party in making what? In making financial or operating decisions. So obviously we know it well, very well in business. Maximum decisions are either related to financial or operating decisions. So complete control is there, we can say. So this definition is very much clear. Now talking about the corporates and the companies. In corporates or companies, we are talking about something different. We will understand it within just few minutes. First of all, I would like to go very slowly so that you can understand everything in a very logical way. Yes. Coming to this. ES 18. It deals with this type of relationship or in the situation. In which situation? When, means this type of things will come into the picture when enterprise that directly or indirectly, now very good important point, directly or indirectly. In number of cases we have seen that in our families, like there is a father, there is a mother, and there is a son. Now what is to be done for that son is normally not controlled by father, not controlled by mother. Instead, it is controlled by son's Dadaji. Dadaji have complete influence over the decisions of father and mother for that particular son. So it means that son is indirectly controlled by Dadaji. Decision is to be taken by father or by mother, but that is indirectly controlled by Dadaji. Or in some families, we have seen that whatever decision is to be taken by father, mother, son, that is taken by mother's in-law, mother's family, that is Nana ji and Nani ji, Nanka family. So whatever is to be done by son, which stream he will take, commerce or arts, what he will be in the future, whether he is going to be a doctor or going to be a chartered accountant or going to become a businessman, that is normally influenced indirectly by the Nanka family. So that we are going to discuss now, Peter. Try to understand this thing. Enterprise that directly or indirectly through one or more intermediaries. So it may be there may be some intermediaries also. Control or are controlled by, or as under common control. Even it may be there that there are common control with the reporting enterprises. So that is called a related party. We are trying to understand what will be the related party. These are the different type of relationships in related parties. First relationship, you have to understand that assume in case of you may say uh, a particular business. In case of a particular business, there may be a chance that A, B both have 5% shares of that company. Another company C have a 10% shares, but these are correlated with each other. They thrice have proportionate control on this particular business of XYZ. So in XYZ, these thrice have total 20% share, and these are correlated with each other. So they may impact on the decisions of that particular XYZ enterprise. Due to that reason, they will be assumed as a related party. Even they doesn't have 20% shares, but in total they will become 20%, and they may change the decisions of that particular XYZ enterprises. So in that case, we will assume that this is a related party. Okay. Associates, already clear to normal routine students that holding and subsidiary relationship exist with 50% more than 50% shares, and associate relationship comes into picture with 20% shares. If a company has 20% or more shares of other company, then obviously it have influence as an associate. It will become associate of other company. So if you are an associate and joint ventures, or you are working on a joint venture with that particular company of the reporting enterprise, and the investing party or venture in respect to which the reporting enterprise is an associate or a joint venture, means in simple words, if you are an associate or joint venture with that particular reporting enterprises, obviously you are a related party. Then voting power, we know it very well what meant so the voting power is. Now voting power meant for whenever the meeting will be done for taking any decision, those who have the voting power will be considered as most important. Now if I have out of 1 lakh shares issued by the company, I have 100 shares, and accordingly I have voting power. So this is not going to affect the decisions of the management, so it will not be considered as a related party. But in case it gives control or significant influence over the enterprise, means out of 1 lakh shares I control 20% or 25% shares, I control 50% or more than 50% shares, means either way I have a good impact on the decisions, or control I have a control or significant influence over the enterprise and relatives of any such individual, means this way or that way, owning directly or indirectly, or an interest in the voting power. Directly or indirectly means for There's a company XYZ. This is basically targeting about an individual now. So we are coming out of the company. I'm running a business, Pradeep Makkad. Now, in this case, if I'm running a business, in my business, there is a significant influence of Mr. A. Reason being, Mr. A plus his wife plus his son, they thrice have a total such shares in my company, in my organization, that assumed he have 5%, his wife have 5%, his son have 12%. So he thrice have a good share in my company. It is 22% in my business. I'm running a business. They have thrice 22% share in my particular business. But that is in total. So that is interesting to say, if some people jointly control such shares or such weightage in your organization, that the decision is impactful, because here Mr. A is more important, not his wife or son. This is just a dummies, you may say, which has been created here. Actual decision is taken by Mr. A. So Mr. A will be considered as a relative or a related party with me in this case. That he is. I'm taking examples only. This is not a. This is for your understanding only. But key management personals means GM, board of directors. You may say head of departments. So these are the key management personas and relatives of such personas. Even their relatives will be assumed as related parties. Enterprise over which any person described in C or D is able to exercise significant influence. Enterprise over which any person described in C or D is able to exercise significant control. This include enterprise owned by director or major shareholders of the reporting enterprise that have a member of key management in common with the reporting enterprise. So that has been explained, that in this way or that way, wherever we feel that any such relationship comes into the picture, directly or indirectly, that impacts on the decision making, that impacts on the control or or having significant influence over the decisions of any enterprise, which is a reporting enterprise. What means for reporting enterprise? The enterprise for which we are doing this accounting, for which we are discussing all that. So that is a reporting enterprise. If I am discussing reporting enterprise, if I am discussing about an enterprise named XYZ Limited, that means for XYZ Limited is a reporting enterprise. So that will all depends upon the case to case basis. Read once again this thing. Whatever we have discussed, read once again this thing. Having any doubt, let me clear. Yes. Assuming it is clear. So next. Very simple, yes. You need not to worry. Just go into the relationships, that whenever any such relationship comes into the picture where one One is this, that they have a control either as a single organization or in consolidation with other organization. If they have a control on other organization, and or second thing is, or they may exercise significant influence over the decisions, and those decisions are financial or operating decisions. They may impact the decision. Obviously, in that case, in reporting enterprise, that is in other parties financial statement, they will be assumed as a related party. Like if you will see that in case of LIC, what will be the organization that have a good control? Obviously, in that case, central government have a good control on LIC because they have more than 50% shares in that company. So that is a related party for them for reporting in financial statements of LIC. Central government is a related party. Second, if LIC has taken, if LIC has taken LIC government, that is central government, central government has 50% shares in railway, even 70% we can say, because actually they have much more than that. I'm just taking an example. Now LIC has made some investment in railway and they have 20% control in that. So LIC will become also a related party in addition to central government. Central government is a related party, no doubt. LIC will also become a related party. Now LIC has various subsidiaries, like we know it very well, housing, LIC housing, LIC A, LIC B, LIC C, LIC have various subsidiaries. So in railway, what has been done? This has taken 10% shares, this has taken 2% shares, this has taken 4% shares, this has given a loan to this company, to railway, which is 1,000 crores. So in this way, LIC have overall control on this railway in various ways. So due to that reason, LIC will be assumed as a related party. Already discussed in point C about control and influence. How is it different from point number E? In point number E, he has given more details. That, yes, this is point number E. Enterprise over which any person described in C or D is able to exercise significant control. Meaning thereby, if there are key management personnel and relative of such personnel are there, and they have or they are able to exercise significant influence, only then they will be assumed as, if they are key management personnel but they doesn't have any right, in that case they will not be assumed as a related party. Individual owning directly or indirectly in an interest in the voting power of the enterprise that give them control or significant influence. Now he says enterprise over which any person described in C or D is able to influence, means there must be a second thing also. So this include enterprise owned by directors or major shareholder of the reporting enterprise, and enterprise that have a member of key management. In just to explain it, E is just an explanation to C and D. It will be in addition to that. Nothing else is there. You need not worry. Not take it too much in depth. Take it very easy. In a simple way, it will be easy for you. This is more detailed, more advanced only in case of CA final. In CA inter, we have a logical or conceptual understanding of these areas which is required, not more than that. So following are deemed not to be considered as related part. Earlier we were discussing that these are related and these are not the related now. Two companies simply because they have a director in common. So both have the same director. It doesn't mean for that they are related part. But if that director is able to affect the policies of both companies while taking mutual dealings, means he have a control on that and he may impact on the mutual dealings of these two companies that he is interested to say. Unless the director is able to effect the policies of both companies, he's going to effect. He may effect that in their mutual dealings, only in their mutual dealings. If there is no mutual dealings between them, there is no dealing between them in these two enterprises. Only there is a company named A, another company named B. Now A is the director of both the companies. Now I'm talking about Z. Z is the director of both the companies, but these two companies have no dealing with each other. They are not dealing with each other. So in that case, there is no need of mentioning that Z is a relative of A or relative of B. All that is not required. But if A and B are making some dealings with each other, in that case, we will have to consider whether Z have any such power that he may impact on the decision making or mutual dealings between these two. In that case, he will be assumed as a related party. Two companies have same customers, there's no worry, there may be a chance. Supplier, franchisor means two companies have franchisee of same company. Like if you will see, I'm the distributor. There's a name. I'm the distributor of Amul. Another person have also the distribution ship of Amul. That doesn't mean for we are related to each other. LIC agents, there are many LIC agents, but it doesn't mean for that they are going to be correlated with each other. With whom an enterprise transacts significant volume of business. Even if we are doing a significant influence of transaction of business, even then there's no problem. So with those with which we are doing significant business, even then we can't treat them as a relative with each other because there is no such case in this case. Providers of finance means bankers. If A has taken a loan from SBI, B has also taken a loan from SBI, it doesn't mean for A and B are correlated with each other. If we are with same trade union, means trade union is same, government agencies are same, means LIC has also invested in railway, invested in NHAI. That doesn't mean for that NHAI and railway are correlated with each other. LIC has invested in this, LIC has invested in this. That doesn't mean for they are correlated with each other. Government agencies and public utilities in the course of normal dealing of an enterprise means we are dealing normally. There's no such case that some exceptions are there. If some exceptions are there, we may consider it, but otherwise no. No disclosure is required in the consolidated in respect of intra-group transaction. Let's discuss about the key terms. Related party transaction. So what is the related party transaction? Earlier we were discussing about related party relationship. Now I'm discussing about a related party transfer. In that case, go upstairs. A transfer is made of what? Of resources. Resources meant for whichever money or money's worth, whichever value in money or money's worth, or obligations. Obviously, it meant for some liabilities have been transferred. Resources meant for basically an assets having value in money or money's worth. Obligation meant for liabilities having a value in money or money's worth. A transfer is made of any asset or liability Resources include many other things. I am not talking about asset in that with that meaning. Asset means for anything having money or money's worth which have a value for us, and that is just like our asset or just like our owned product. And obligation means for liabilities. Obviously, whatever is paid to someone, that is our liability. So between related parties, first of all, there must be related party relationship that we have understood. In that related party relationship, a transfer is made regardless of whether or not a price is charged. Whether price is charged or not charged, that is not a point, but it is a related party transaction. If the transaction, if any transaction has occurred between related parties, means transactions between related party is a related party transaction, is a related party transaction. That's very simple. Obviously, transaction means for any type of transfer of what, of resources or obligation. So what means for this? If there is a transfer of any resource or obligation between related parties, whether amount is charged, less charged, more charged, that is not a point of consideration. It is a related party transaction. Directors participating in the business decision means the director holding the position of executive position only. Mere holding director position need not be a direct treated as a director having exactly better right. Meghna, does a party has the ability to influence and control is important here in this as to identify whether it is a related party or not. Exactly beta. The a party is a related party only and only if they may have a control, they have an ability to control, or they may affect the or they may influence they may significantly influence the decisions of the reporting enterprise. Only then it will be assumed. What is intra-group transactions, sir? Just wait, beta. If it will come into our picture, Madhushri, we are talking about AS 18. Na? Let's go forward. Yes. Now we are talking about what means for control in detail. That is already discussed. It is just you may say additional information for that already understood. Control means for ownership or directly or indirectly of more than one half of the voting power. So this is to be understood that 50% or more than 50%, more than one half, not a 50% even, more than 50% of the voting power of the enterprise. If I have the ownership, obviously I have the control. Control of the composition of the board of directors in the case of a company, or of a composition of the corresponding governing body in the case of any enterprise. Means that is normally that normally happens like this, that I will take an example for you that's more better. Sher Khan has invested in Paytm. What is Paytm? We know it very well. Nowadays, Paytm is very famous. Everyone knows about Paytm. In Paytm, Sher Khan has invested money in that. Now, when Sher Khan has invested money, Sher Khan tell him that out of 5 directors of the company, 3 will be mine. Whatever I have invested, that is a point of that is not a point of consideration. I'm going to discuss that. Even I am going to invest only 10% of the total capital of the company. But the important thing is that 3 directors will be mine. There are total 5 directors taking all the decisions. Out of that, 3 directors will be mine. So it means for I may have a control on the composition of the board of directors. Sher Khan will have the control on the composition of the board of directors in the case of Paytm. So in this case, obviously, we can understand this, that here Sher Khan have a control on Paytm. because I have a control on the governing body, which is basically board of directors. Like in case of ICI, I'm just taking an example. Government has their nominees. Now, government tell us that we have to make NAFRA. NAFRA is an organization made for the purpose of controlling or regulating the chartered accountants. In that, government tells us that we will have a more control of the non-chartered accountants. In that means government have non-chartered accountants in that, and non-CAs are more than the CAs in that case. So in that case, obviously, non-CA have a control on that particular body. So this type of things are. These are just an example. Don't take it as a otherwise, because I'm not talking about any law, or I am not talking about anything like which is not a which is to be taken as it is, because these are just the examples, and these examples may vary in actual. So third is substantial interest in voting power and the power to direct by statute or agreement the financial or operating policies of the enterprise. That means for we have a substantial interest in the voting power. Substantial again, that means for that can change the that can affect the decisions of the enterprise, and the power to direct by statute means here there is a control of law or any agreement is there also. So due to any law, if they have a control, like in case of banks, if we'll see, RBI have a various type of controls on bank by way of statute. Statute means Banking Regulation Act is a statute. So RBI may control on banks by way of that particular statute, by way of that particular act. So in that case, we can say that they have a substantial interest in that. Assuming it is clear, for the purpose of AS 18, an enterprise is considered to control the composition if it has the power. It has the power without what? Without the consent or concurrence of any other person, to appoint or remove all or a majority of shareholders, a majority of directors or members of the governing body. Means if they have when we can say control, that they have the power to remove or to appoint majority of the directors. Even in that case, it will be assumed as control. Like in case of LIC, government have a good control on LIC, because LIC is an organization which is controlled and managed by government, because it's a government company. So in that case, government has full power. So that is assumed as a related party, because they can appoint, they can remove directors. You may see LIC Housing. What is in that case? In case of LIC Housing, assume, just we are discussing, LIC have a good control that they can. Otherwise, they doesn't have any have taken any shares in that, but they have a control this way or that way. They can appoint, they can remove majority of the directors of that body. In that case, also it will be assumed as a control. So we have to study this from all angles, but this is not our duty. In while giving a question, while giving a case study, it will be very much clear, because they must have to give information about this. An enterprise is deemed to have the power to appoint if any of the following conditions are satisfied. A person cannot be appointed without the consent of that person. Means while taking if any member is to become the director of that company, then approval is to be taken from someone. Like in case you may assume that there is a Raja. I may take an example. You may assume that there is a king in a particular country. Like earlier it was in Nepal and Sri Lanka. Number of other countries are also there. Now, whenever a government is made by democracy, Government is made by democracy. Prime Minister is there, President is there, other persons are there. But while doing any particular big task in relation to whenever any decision is to be taken at a big level, or whenever any other big work is to be done, in that case, that king is very important. You must have to take approval of that king. So in that case, obviously, it is very much clear that even it is democratic, it is a democratic government, but this king has full power in that. So in that case, that person is a controlling person. That person is a related person. And it happens. We know it very well. A person's appointment as director or member follow unnecessarily from his appointment to a position held by in that enterprise. Means one thing is more important, that a person can. This is some other example. I would like to take it for you. There's a company A Limited. There's a company A Limited. In this A Limited, any director can be appointed only and only. Any director can be appointed only if he is a director of B Limited. No other director can be appointed. Only B Limited director can be appointed in E Limited. This has been written in its statute, in its MOA, in its EOA, whatever the policy documents are there, whatever is related to it, that has been finalized, that has been decided that only that can be appointed. So here it is a related party. This B Limited is a related party to A Limited. Otherwise, B Limited has no working with them. But this is the condition that director of B Limited can be appointed for A Limited only. So that it means for the director member of the governing body is nominated by that enterprise. In case that enterprise is a company, the director is nominated by that company or subsidiary thereof. The director member of the governing body is nominated by that enterprise. Just like same that if a director or member of the governing body is nominated by an other enterprise, and that enterprise nomination is compulsory. If that can, in case that enterprise is a company, the director is nominated by that company or subsidiary thereof. Means this is again same thing, that in A Limited, a director can be nominated only and only if B Limited will nominate him. So first approval of B Limited is there. So due to that reason, this B Limited is a related party to this, have a control on A Limited. So that we are talking about power to appoint director or members. Substantial interest. So this is very much clear to everyone maybe, because earlier also you have studied it somewhere or not? No. Okay. So we have a substantial interest in another enterprise if 20% or more interest in the voting power of the other enterprise. If that enterprise or individuals owns directly or indirectly, again directly or indirectly meaning is clear according to my opinion. Indirectly means through any other sources also, if they can do it. So in total they have 20% or more interest in the voting power, 20% or more. In case of substantial interest, it is 20% or more. In case of control, it is more than 50%. In case of control, it is more than 50%. But in case of associate, in case of substantial interest, sir. In case of substantial, note it down because these are important. Substantial interest, it is equal to, you may write in this way, equal to or more than 20%. So that individual owned directly or indirectly 20% or more interest in the voting power of the enterprise. That individual owned directly or indirectly 20% or more interest in the voting power. Here that enterprise or individual own directly or indirectly 20% or more interest in the voting power of other enterprise. So there are two lines which are different here. An enterprise is considered to have a substantial interest in another enterprise if that enterprise or individual owns directly or indirectly 20% or more interest in the voting power of the other enterprise, or that enterprise owns directly or indirectly 20% or more interest in the voting power of the enterprise. So these are two lines, assuming it is clear. इंग्लिश को इंग्लिश में समझाना मुश्किल रहता है, because in that case obviously meaning must be given in English only. So I'm trying to do that for my best. It is all depending upon you whether you are satisfied or not, whether you are clear on these concepts, because I'm trying a lot. Associate, what means for associate? Associate means an enterprise in which an investing reporting party has significant influence and which is neither a subsidiary nor a joint venture of that party. Means here we are keeping it separate. It is not a joint venture, not a, you may say, a subsidiary, holding subsidiary relationship is not there. Even then, they have significant influence on us. If they have a significant influence on us due to any reason associated in which an investing investing reporting party, whomsoever is the investing or reporting party, has significant influence. And what is significant influence? That is to be clear. That can change the decisions. So, is significant influence is participation in the financial or operating policy decision, but not control of those policies. We doesn't have control, but we may participate in the financial or operating policy decisions of an enterprise. So that is called a significant control. What is a significant control? Is participation in the financial or operating policy decisions. I am a part of that. I am not control that, but I am a part of that. Means here 50% is not there, here 20% is not there. Sorry. Significant influence may be gained by share ownership, statutory, or by agreement. This is like in ICI, government nominees are there. In ICSI, government nominees are there as in the controlling body. Like in central council members, out of central council members, few are nominated by the government of India. So they have a significant influence because they have a control. They may take part in the financial or operating decisions of the ICI. So due to that reason, they have a significant influence on that. If they have a significant influence that has been obtained by them by way of statutory. So statutory means law. This is a act of Chartered Accountant Act, which give them the right to be a part of this all the financial or reporting decisions. So if we are talking about share ownership, that is 20% or more. If you have 20% or more shares, in that case, you may be assumed as a significant influent person. Otherwise, by statutory or agreement, there is no such shares limit is there, because in that case, there may be zero share with them. There is no problem. Is substantial or majority ownership by another investing party doesn't necessarily preclude an investing party from having significant influence. Means if one party have a significant influence, then other party may also have significant influence. It doesn't matter if one party have significant influence, then other doesn't have. This doesn't mean too much. Indirect interest is beneficial interest. Exactly, beta. There's no doubt. I think students need a break now, because this is just a you may say theory. I'm trying to make it practical, but it is too much theory. So we'll meet after 10 minutes and go further. We may have a break now. Sir, we may have a break. Welcome back. So let's go for further. Already we have discussed regarding the many aspects of related party. Continue with that. What is the key management personnel? Who have the authority or responsibility for planning, directing, and controlling the activities of the reporting enterprise. It will be assumed as a key management personnel. Number of times we have the employees, we have the personnel, which are the management personnel, but they doesn't have a right or doesn't have a responsibility go for the planning, directing, and controlling. They are just attending the meetings, nothing else. So in those cases, they will not be assumed as the person who are the persons of key management personnel according to this AS. Because in this AS, we are very much clear that we have to take only those persons which have the authority and responsibility. Without authority and responsibility for planning, directly, and controlling the reporting enterprise, the activities of reporting enterprise, a person cannot be assumed as a key management personnel. Let it be very much clear. What is an individual relative means that is given? The definition, let it be very much clear that who is a relative to us in case of individual. A spouse is a relative, a son is a relative. Spouse means you may say our near and dear family members. Spouse, house, son, daughter, brother, sister, father, and mother. Any person who may be expected to influence or be influenced by that individual and which is neither a subsidiary. You may take it as a definition that is more better. Let it be very much clear. Treat it as a definition incomplete. Read it. Yes. In relation to an individual, relative means we are talking about an individual. What means the relative? He means a spouse, son, daughter, etc. Any person means these are the total persons, but out of this, we are talking about any person, mother, any person who may be expected to influence. Let's go for the definition in this way. It may be better studied from the complete detailed AS. It will be better. In this case, these things are important only, whatever we are discussing. In this case, you need not to worry that we have to do something else also. But we are near to the completion of this AS within just few minutes. So there's no worry about that. You have understood whatever you have understood. This is the only important thing in this. Number of times it comes to our mind that मतलब अभी AS बहुत ज़्यादा पड़ा होगा, it's too much pending, पता नहीं इसमें और क्या होगा, ऐसा कुछ नहीं है. There's no worry. It just we are just discussing about what is the related party, what is the related party transaction, how it is to be disclosed. So disclosure is pending only. We are talking about relatives. Relatives, it means an individual, means the spouse, son, daughter, brother, who may be expected to influence. So due to that reason I have shown here, because there a word has been mentioned, any person. So any person meant for the person out of this, your spouse, son, daughter, brother, sister, or father or mother. Out of this, if any person is there who may influence or be influenced by that individual in his or her dealing with the reporting enterprise, he will be assumed as a relative, not the other person. In addition to this, there is no other person. We are talking about relatives only. And when we are talking about relatives, it is very much simple. Relative meant for spouse, son, daughter, etc. And out of this, that will be assumed as a relative person who may influence or who may be expected to influence or be influenced by that individual, and which is neither a subsidiary in his or her dealing with the reporting enterprise. Means That is a point. What is a joint venture? It is a contractual agreement where two or more parties undertake an economic activity which is under subject to joint control. That has been already done by you in CA Foundation. Joint venture chapter is already done by you. So that is called a joint venture when two or more organizations under a contractual agreement agree to work together for a particular contract, for a particular venture, which is subject to joint control, which is under the control of all those persons. So that is a joint venture. What is a joint control? In this case, we are sharing the power. Means 40% sharing is made by one, 60% is by other, 20-80 is there, 50-50 is there. Anything. Joint control is contractual agreement. Sharing of power, in which sharing of power is there to govern the financial and operating policies of the company, of an economic activity. Talking about economic activity. Sorry. So for any economic activity, if there is a joint control of two or more persons, so that joint control will be treated here. Holding company, we know it very well. Subsidiary, we know it very well. Same definition is there. Fellow subsidiary is very simple. If two companies are subsidiary of some other company, company is considered to be a fellow subsidiary of another company if both are subsidiaries of the same holding company. A and B both are the subsidiary of X company. So in that case, X and Y are also assumed as relatives to each other. They are also becoming a related party. Very simple, yes. If you will see, normally people say AS 18 is very tough, AS 18 is very tough. That is just to create a mindset for the students that they may assume that this is a tough. I would like to create a mindset, only one, that one mindset is always okay. That everything is easy, we can do it. If we can do it, we will do it. If we think we can't do it, we will be unable to do it. So let's understand this thing, that this is our own mind, which is to be created in a positive wave, or we have to take it into a negative wave. So let it be very much easy. What is a related party issue? Related party relationships are a normal feature of commerce and business. Let it be very much clear, because it is not an extraordinary thing. In every business, there are many related parties with us. So why we are disclosing this? The concept is very simple. Normally, it is assumed that transactions between related parties are not at arm's length price. Means there is some favoritism, there is some bias made while making transaction with the related parties. So due to that reason, this disclosure requirements are made so that it can be checked whether these transactions are made on arm's length basis or not. The operating results and financial position of an enterprise may be affected by a related party relationship, even if related party transaction do not occur. Means there is no favorism, there is no bias, but even then, results may be affected in this case, because when a person have a control on the other, then his control may be impactful. His control have something which have created effect on that. There may be also a chance that there are related party relationship, so no transaction will be made. This is a policy of the company that these are the related parties and we will not have to make any transaction. So these are all issues which are coming to us, which we have to study. So what is to be disclosed? Very simple disclosure is there, beta. First of all, name of the related party. That is, yes, here it is better. If there has been transaction between related parties during the existence of a related party relationship. So what is to be disclosed? Name of the transaction, related party, transacting related party, means with whom transactions are made, description of the relationship, description of the nature of transaction, volume of the transaction, any other thing, whatever is required, whatever is there for better communicating the information regarding the company, regarding the transactions, whatever amount is due to or due from that particular related party as on the balance sheet date is to be shown. Whatever provisioning is to be made for doubtful debt with that particular organization, with that particular related party must be shown, so that we can understand that this much amount of sale is made to them. Out of this much amount is received, and this much amount is pending. And finally, out of the pending amount, we are expecting that this much doubtful, this much bad debts will be there. So all that is to be disclosed. Also, if any amount is written off as a bad debts or bad debts recovered with that related party, that must be disclosed. One thing is important that is given here: no disclosure is required of state controlled enterprises, means those enterprises which are controlled by states as regard related party relationship with other state controlled enterprises. Means one is a state controlled enterprise like Punjab and Sindh Bank is controlled by Punjab government, and simultaneously there is another organization of Punjab like the Secretariat of Punjab. So whatever relationship is there, we know it very well, they are related to each other, but that is not required to be shown. So this AS has come to an end. Let's see the questions of this AS. Now, I would like to get answer from you. Start giving the answer. Read illustration. Narmada sold goods of rupees 90 lakh to Ganga during financial year. MD of Narmada owns 100% of Ganga Limited. So tell me, Narmada and Ganga are related or not? These are related party or not? The sales were made to Ganga at a normal selling price, followed by Narmada. Now, sale of 90 lakh is made at normal selling price. Chief accountant says that there is no requirement of any disclosure as the sales are made at normal selling price. Is the chief accountant correct? But before that, tell me whether they are related parties or not, and with which reason. Why it is a related party? Himanshu, answer is correct. Why it is a related party? Whether it is there is a substantial interest. Due to that reason, there is a related party. Whether there is a holding subsidiary relationship is there. Whether there is a key management personal relationship is there. What is the relationship? Exactly right. There is a holding subsidiary relationship is there. Related party is there. Very good. Now transactions are made between these two. Very good. Transactions are made between these two of rupees 90 lakh. So that means for it should be very much clear to you that whenever any transaction happens between related parties, that must be disclosed, even if it has been done at its full price or not. That is not a point of consideration. Mrs. Purnima, this is not correct. They are related party as they have common directors. Where it is mentioned that they have common directors, it is not mentioned anywhere. No, he is not correct because they are significant influence. Holding, beta, in this case, holding and subsidiary relationship is there. That is very much clear that they own 100% of Ganga Limited. That in that case, obviously, they are the you will have to go into a simple agenda. What is a significant influence? What is a associate relationship? What is a joint venture? What is a joint control? What is key management personnel? What is uh, this holding subsidiary? Everything should be clear to you. That you have to read. Obviously, it will be clear. So in this case, disclosure is required because holding subsidiary relationship is there and related parties are there. So what is to be disclosed? Now tell me. It is to be disclosed that this transaction has been happened between Narmada and Ganga. One. Second, transaction is sale of 90 lakh of goods. Third, what is the amount due to or due from that particular company? Whatever amount is received, whatever provision is created, all that is to be disclosed. So only one question is given. So what you will do, you may do more from suggested answers, it will be better. Or you may do it from your 10 year, whatever you may purchase from the market, that will be better. Because more and more questions will help you to do. Let's go for the next AS, AS 19. An important AS from examination point of view, because number of times we get question from this AS. Comparative to AS 17 and 18, this AS is more important. Because in exams, we are getting question out of this AS in a routine. So let's do this AS. Come to your quick reference module, because that is always helpful, I assume. AS 19, leases. So this AS himself defines its understanding that we have to discuss each and everything about leases. Now there is not, we are not going to discuss one thing only. That like in AS 18, it was related party disclosure. It was very much clear we are going to discuss about the disclosure requirements of related party. But in case of leases, we are not going to discuss only the word leases. We are going to discuss everything regarding leases. So due to that reason, I am saying this AS is important, having very good practical questions with it. So let's understand it. We are unable to cover it today in full. We'll cover it partially today, partially on in our next lecture. So I suggest you to read it from your home also in full. A part will be covered today. Now, what is the objective? There are two persons in leases. One is the lessee and second one is the lessor. A person who is giving the lease is named as lessee and the person who is taking the lease is named as lessor. So there are two persons as already mentioned. What we have to discuss? We have to prescribe the appropriate accounting policies and disclosures. Means, first of all, we have to describe accounting policies to be followed. Accounting policy. Second one is the disclosure requirement. What will be the disclosure requirements in relation to what? In relation to finance leases and operating leases. So it is very much clear there are two types of leases here. One is finance, second one is operating. We'll discuss within a few minutes. So the objective is very much clear. We have to prescribe, we have to go into depth because less is there, lesser is there. For both, we have to discuss appropriate accounting policies to be followed, not for the one. Second thing, also disclosure requirements is to be followed in relation to what? In relation to all type of leases, because there are only two types of leases and both are to be discussed in this case, finance leases and operating leases. So let's start with that. So what is a lease? Try to understand by way of this presentation. What is a lease? Very simple. A is there having some land or building or any property, or you may say set of plant and machinery with him. Interested to give it on rent to someone. B approached him and asked him to give this to him on rent. He says, okay, I'll give it to you on rent, but there's no surety that you will vacate it after 1 year whenever I'll require it. So we should have to go for some agreement. A says, no, don't worry, I'll vacate it whenever you will say. But A says, this is not a good thing. I must have to go for some agreement. B agreed that he will go for an agreement. So now agreement is to be finalized. So that agreement is there, that has been finalized. It will depend upon 11 months agreement or number of years agreement, means 2 years agreement, 3 years agreement, 10 years agreement, 15 years agreement, like that. And that agreement has been finalized and signed between both of them. So this is what giving our property on rent. It may be lease also. It may be a simple rental agreement also. So that we have to discuss in this chapter, in this ES. So it is very much clear. It is a here lease is what is a lease? Lease is where lessor means legal owner of an asset, means he is the owner. Who is the lessor? Write it down with you. Lessor is the owner of the asset. Who is the lessee? Tenant. Tenant is lessee. Conveys to the lessee in return for a payment, series of periodic payment, means a person which is a lessor gives his asset, conveys means giving his asset to the lessee for what? For payment. So payment is compulsion. If he is giving it free, then there is no such case. We are talking about in return for a payment or series of payments. Means it may be a lump sum payment also. That this has been given for 5 years, 4 rupees, 5 lakhs. So this is also lease agreement. And there may be another option: monthly, quarterly, annual rental, whatever is decided. That is called lease rent. That has been decided 10,000 rupees per month. So series of periodic payment means for monthly, quarterly, half yearly, yearly, whatever it is. Lump sum means once payment is made for a particular period, now it comes to an end. After 5 years, I'll have to vacate that land. That's it. Because this has been finalized for the whole period. Assuming it is clear. So what is the scope of this ES? It will apply to all leases, except only few. So which has been left, that is to be understood. You have to memorize only this. You need not to worry about on which lease it will be applied. It will be applied to all leases. You have to left only one. That is, whenever we are talking about oil, gas, or timber metals or other mineral rights, that is given by Government of India to someone, because lease agreement to explore for or use of natural resources. Natural resources are the asset of the Government of India. So government of India, if giving any asset, any asset of natural resources to someone on lease, that will not be covered here because that is governed by some other law. Then licensing picture movies, video recordings, plays, manuscripts, patents, and copyrights. These will not be covered. Then lease agreements to use land. We are giving lease agreement, so we are giving land on lease. So that will not be covered. Only lands. Building is not there. If there is a building, that will be covered. If it is only land, that will not be covered because that is a problem of agriculture. Because number of times it will be governed by Agriculture Act. So due to that reason, it has not been covered here. Next is contract for services. Means the contract is for providing services. Here, right to use asset from one contracting party to the other is not transferred. Contract for service means for whitewashing of our building. That building has been given to the whitewasher to make it whitewash, or you may say it is given for extension, it is given for alteration, amendments like that. In that case, there is no chance of right to use of asset is given. We are just giving it for the service. That service is taken by us, or they are providing us the services in any other way. Like I have given a room in my building to a computer professionals for doing work for me. They are doing work for me. So they are providing me services of computer, and I have given them the space for the same. So that is not a contract of lease or giving a property to someone. Now there are cancelable and non-cancelable leases. Non-cancelable lease is a lease that is cancelable upon the occurrence. What is a non-cancelable lease? What is a non-cancelable lease? Means which can't be cancelled. That is called non-cancelable, and cancelable means which can be cancelled at any time by either party. By either party. So non-cancelable is a lease that is cancelable upon the occurrence of some remote contingencies only, or with the permission of lessor, or if the lessee enters into a new lessor. So this is very much clear. These are just an information. Non-cancelable lease is a lease that is cancelable upon the occurrence of some remote contingency. Otherwise, it can't be cancelled, or with the permission of lessor only. Or means it is not and, it is or. So it can be cancelled only with the permission of the lessor, or if the lessee enters into a new lease for the same or an equivalent asset with the same lessor. Means previous leases will automatically come to an end if, just assume, A and B are dealing with each other, where he is the lessor and B is the lessee. So a building is given on lease to B for 5 years. Now at the end of 3 years, A and B enters into another agreement of lease between each other, with each other, for the same building. In that case, automatically this lease has been cancelled. This is a normal thing. Upon payment by the lessee of an additional amount such that at inception continuation of the lease is reasonably certain. Now lessor and lessee A and B enters into a lease for 10 years. Now at the end of 4 years, B approached to A that I am not interested to continue. I'll make you a payment of 10 lakhs as decided at the time of starting of this lease, that if I leave it before the expiry of the period, then I'll pay this much amount to you. And he is agreed to pay that amount, but he is interested to cancel it at the earliest. So there's no problem, it may be cancelled in that case. Remote contingency means like earthquake, like tsunami, like any such event has occurred, death of a lessee, or any mishappening with the lessee in such a way, or the lesser in such a way that that is just like a unimaginary event, that is called remote contingency. Remaining definition will come to you, we will understand it later on. There's no worry. So whatever the lease term is, that is a non-cancelable period. Lease term is the non-cancelable period for which the lessee has agreed to take on lease the assets together with any future benefits, a future period for which the lease has the option to, lessee has the option to continue the lease or without or with further payment. Which option at the inception of the lease is reasonable, certain. Let's understand it from the detailed module. It will be better for your understanding. Yeah, the lease term is the non-cancelable period. Let it be very much clear. The lease term for whatever period lease is given, this is the non-cancelable period for which the lessee has agreed to take on lease the asset together with any future periods, further periods, for which the lessee has the option to continue the lease of the asset with or without further payments, which option at the inception of lease it is reasonably certain that the lessee will exercise. Means when this lease agreement was made, it has been decided that this much amount will be paid by the lessee for continuation of the lease, or this much amount is not required to be paid by the lessee. Means it may be given to free of cost to the lessee for a period of 6 years if he make the payment of 10 lakh at the inception of the lease. Means at the starting of the lease, 10 lakh is to be paid by the lessee to the lessor. After that, 10 years are given to him for working in that lease. So that is a non-cancelable period for that 10 years. This doesn't happen. This is not possible that after giving it on a lease for 10 years for a amount of rupees 10 lakh. Let's understand it. A given to B a property on lease for rupees 10 lakhs for 10 years. Now, in that case, it is not possible that A will come to B before expiry of 10 years for cancellation of lease, as he has already made payment of rupees 10 lakh for 10 years. So in that case, it is not possible to be cancelled. A doesn't come to B that I am interested after 6 years that a major uncertainty is there or any problem is there, I am interested to get my property back. It is not possible. Is that clear to everyone? Now, what is the minimum lease payment that we have to understand? Minimum lease payment means for the payment over the lease term. Whatever the lease term is there, assume it is a period of 4 years or 5 years, whatever the lease term period is there. Lessee is to make, excluding contingent rent, cost for services and taxes to be paid by and reimbursed to the lessor. Let's understand it again in detail. It will be better. This is the minimum lease payment. So what is the minimum lease payment? Let's try to understand that. These are the payments over the lease term. These are the payments over lease term, means for the full term, that the lessee or is or can be required to make. These payments are to be made by lessee. Excluding means without including in it contingent rent, means that rent which may or may not be paid, which will be paid only on occurrence or non-occurrence of one or more future uncertain events. So that is not a part of it. Means we have discussed that if such uncertainty will happen, then you have to pay me rupees 10,000 extra. So that is not to be covered in it. Cost of services and taxes to be paid, house tax to be paid by the lessee to lesser number of times, or other taxes are to be paid. That will not be taken into this. Yes, that will not be included in it. So we can say that whatever actual lease rent to be paid, except taxes, except other cost of services like water tax, like sewerage tax, like water charges, like electricity charges, those are not to be included. I'm not talking about those. That whatever in addition to lease rent we have to pay, and which is reimbursed to the lesser. Paid or reimbursed to the lesser. Number of times it happens. Lesser says, I'll pay it, you will have to reimburse it to me. So that will not be included. Okay. Together with. And what is to be taken? What is to be taken while calculating MLP? In case of lessee, any residual value granted by or on behalf of lessee. What happened? I have taken a building on rent from Mr. Ramesh. Now, Mr. Ramesh said, tell me that I'm giving you this building on rent. What will happen after 10 years when you will give it back to me? Its value will be zero because you will completely scrap it. I tell him, no. I'm assuring you that this building will be easily sold for rupees 10 lakh at the end of 10 years. I assured him, means this is for the purpose of maintaining the quality of that particular asset. This is assured at the beginning. Number of times lesser ask from lessee that I'm giving this product on rent to you, but the problem is this: you must have to give it back to me after that particular period, and that must be of some value. If you will completely damage it or destroy it, it will not be of my any use. So let's guarantee it first. So that is called residual value granted by lessee himself, or on behalf of lessee someone else have granted. There may be some grantor also which is there to guarantee this in any case. So in the case of the lesser, any residual value granted to the lesser, yeah, that was in the case of lessee. It is clear to everyone? MLP. In the case of lesser, any residual value granted to the lesser by or on behalf of the lessee by an independent third party financially capable of giving the guarantee. Means this MLP definition will be from two persons' point of view. What is minimum lease payment? I would like to let you clear with an example. After reading this, I'll give a good example for you so you can understand it in more detail. So that means for in case of lesser, whatever guarantee is made by someone else on behalf of lessee or by the lessee or by an independent third party. Number of times someone else is giving me the guarantee that after the expiry of this period, this asset will be of this much value. If the lessee has an option to purchase the asset at a price which is expected to be sufficiently lower than the fair value at the inception of the lease, is reasonably certain to pay the MLP comprising MLP payable over the lease term, the payment required to exercise this option. Let's take an example. Very easy, very easy. Don't worry. MLP. MLP to be calculated. But before that, let's understand it. A has given a place building on rent to be monthly rental 1 lakh per month given for 10 years. B guarantee to A. B has given guarantee to A that after 10 years, your property is of worth rupees 10 crores. At the beginning, when I have taken it on rent, its value was worth rupees 15 crores. So I assure him that when I leave that, it will be of 10 crore each. That is residual value. So what is MLP? MLP meant for the, in addition to this, B will pay to A house rent, house tax, sorry. House tax, water charges, electricity charges, sewerage charges, cleanliness charges, maintenance charges. So these all will be paid. But these are not to be considered for calculating MLP. Let it be very much clear. So what is MLP? 1 lakh into 12 for 1 year into 10 for 10 years. ₹1.20 crore plus residual value 10 crore, whatever is granted. So MLP is 11.20 crores. So this is MLP from lessee point of view. From lesser point of view, it is again same 11.20 crore. There is no difference. That has been mentioned here. First thing should be clear to everyone. If the lessee has an option to purchase, first thing should be clear to everyone. Next, another example. A, given it on lease to B, same amount is there in previous illustration. Everything is same. In addition to this, same amount of rent is there. In addition to this, A has given an option to B. If B is interested, then B may purchase this property at the end of lease for rupees 8 crores. Like here it is mentioned, if the lessee has an option to purchase the asset at the price which is expected to be sufficiently lower than the fair value at the date of the inspection, exercisable that at the inception of the lease is reasonably certain to be exercised, the MLP comprises minimum payment payable over the lease term and the payment required to exercise this purchase option. So that example I am taking. In this case, it is clear that, and we are sure that B will purchase that asset at the end of the lease. So that means for here MLP is equal to 1 lakh into 12 into 10. This is equal to 1.2 crores plus 8 crores. This is 9.2 crores. So this is what? This is MLP. Whatever amount is to be paid at the end of the lease, in this case, you need not to add other amounts, but you have to add this much to calculate the MLP. So this type of practical questions may come into your exam and we should be prepared for that. Don't worry, we will be ready to solve it. It will be really very easy. Don't worry about anything. What is the fair value? That is normally known to everyone. The value decided between knowledgeable and willing partners at an arm's length price is a fair value. But is economic life the period for which an asset is expected to be used economically, means for the benefit of the business by one or more users, or the number of production or similar unit expected to be obtained from the asset. This has been the same whatever we have done in depreciation chapter, because this is done in CA foundation depreciation also. Useful life means the period over which a leased asset is expected to be used by the lessee, or number of production or similar unit expected to be obtained from that particular asset. The residual value means which is the estimated fair value at the end of the lease term. Granted means which is granted by the lessee, or on behalf of lessee someone else have granted it. And in case of lessor, there are three options. One is granted by lessee, or by on behalf of lessee by someone else, or by an independent third party who is financial capable of discharging the obligation. That means for what? A given to B on lease. Now B have granted him that at the end of the lease, your asset will be worth rupees 10 crores. Or on behalf of B, C has granted that your asset will be worth rupees 10 crores. So this is the granted residual value in case of lessee. For lessor, it is granted by B, that's okay, 10 crore. Or if it is not granted by B, instead C has granted him that it will be worth rupees 10 crores. He is known to B. I have taken a guarantee from B that you must have to give a person who may guarantee on behalf of B. Like in banks, while taking loan, banker demand a guarantor from you. So in the same way, B has been demanded by a guarantor. So C has been presented as a guarantor by B to A, and he has granted him. Or there is a third party. Third party means insurance company like this, or some valuation company that have granted us that they will pay 10 crores of that particular assets after the 10 year. For that, they will charge some amount from me. Obviously, they will charge some amount. They may say, tell me that you have to pay us rupees 1 lakh every year, just like insurance. You have to pay us rupees 1 lakh every year or 10 lakh every year, which will be used for the purpose of maintenance of that particular asset. And at the end of 10 year, we assure you that this asset will be worth rupees 10 crores. So that is granted by him, by that company. In that case, this will be for the point of lessor. So this is a part of MLP, we know it. Gross investment in the lease. Whatever is the MLP under a finance lease. Now we have to understand what is finance lease, what is operating lease. Just wait. Aggregate of the minimum lease payment under a finance lease from the standpoint of lessor. So lessor has one additional point, we know it very well. And any ungranted residual value accruing to the lessor. So what is ungranted residual value, that we will understand within few minutes. So obviously, it is not possible to understand few definitions first and few later, which have a relation with them. Instead, here all definitions have a relationship with each other. So you have to go up down for this purpose. Don't worry. Contingent rent example you may see. So contingent rent. A land has building has been given on rent for rupees 1 lakh per month. A contingency is there. If interest rates by RBI will increase beyond 10% per annum, then additional rent of 10% will be charged. So this is a condition which has been written in the agreement, that in case RBI interest rate, which is 7% now at that time when the agreement was framed, If it will increase beyond 10%, then your rent will also increase by 10%. This is a contingency which will be depending upon the occurrence or non-occurrence of one or more uncertain future events. What is uncertainty? That is, RBI will increase its interest rate beyond 10%. This is uncertainty. So if it will happen, obviously in that case, your rent will increase by 10%. That is 10,000 rupees per month. So this is a contingency. It may or may not occur. Is that clear? So definition is given in this way that we have to read it and understand to some extent. Remaining understanding will be after a few minutes. I'm trying to do it in that way. What is unearned finance income? That means for the difference between gross investment and present value of gross investment, you can say. So what is gross investment? That is to be discussed within few minutes, or you may say we have no, yeah, this is gross investment. What is gross investment? That is the aggregate of MLP and any unguaranteed residual value. What is unguaranteed residual value? Unguaranteed residual value. Yeah, unguaranteed residual value is the amount by which the residual value of the asset exceeds its guaranteed residual value. Like in this case, residual value is granted for rupees 10 crore by B to A. Here, if actual residual value, we know it very well, actual residual value will be 12 crores. But guarantee is given for 10 crores. So the difference of 2 crore that is not granted to us, we know that the value of our asset will be 12 crores at the end of 10 years in any case. But B has granted me only 10 crores. So in that case, the amount of rupees 2 crore which is not granted by B to A, lessee to lesser, will be unguaranteed residual value. Is that clear? Gross investment is also clear. That is MLP, whatever we have calculated from the point of view of lesser plus unguaranteed residual value, whatever is there. Unearned finance income is what? What is unearned finance income? Unearned finance income means for the gross investment minus present value of MLP under a finance lease and any unguaranteed residual value accruing to the lesser, that is gross investment. In simple words, what it is, I would like to take an example for this beta. Here we are going to discuss unearned finance income. Okay. Unearned finance income. What it is? You have to take gross investment minus present value of gross investment. What it means for, it is very simple. As we know that this amount of MLP and other amounts will receive to us in a period of time. It will not be received at the first instance to us, but we have taken it at the first instance. Due to that reason, we should be very much clear. If we have calculated that the gross investment is 10 crores, then we have to deduct out of it the present value of 10 crores. And that is to be calculated by way of financial management concept of NPV, net present value. While we are calculating, we know it very well. Why it is calculated? As this 10 crore is not received to me now. I will receive this 10 crore during the period of 10 years. So whatever is the present value of that 10 crore now a time, it will be obviously less than 10 crore because this amount will be received to me within a period of 10 years. So when I will receive it, accordingly, today's value is only 8 crore of this 10 crore which I will receive in future. So I'm saying 10 crore. So 2 crore is my unearned finance income that I'm interested to tell you. Is that clear? Till now, everything is clear, whatever we have discussed. If there is any doubt, you may do one thing. Read this AS in full. This is your duty. You have to read this AS in full. Understand the examples. We will discuss the complete AS day after tomorrow in our next lecture. And you will understand it. I guarantee you, this will be a very easy and simple AS for solving questions in the exam, because we have to do it from our examination point of view, from our conceptual point of view, and both the things will be clear to you. You need not to worry. Just wait and watch. Just understand and try to understand it in a better way. Once you will understand it, it will be easy for you to understand. You need not to worry. Just read this complete AS. We will do it. Also, you will have to study the practical questions from your 10 year or somewhere from where you are from where you get those questions from the previous years or the previous years AS 18. You have to do that. Okay, then we'll meet in the next lecture.